Hi, I'm Nancy Kokinda with the Little Red Schoolhouse, and I'm here today with a fabulous guest speaker who will be speaking to our group Thursday Throwdown on May 31st. This is a very special topic because it was requested by the realtors who attend consistently to our Thursday Throwdown program, and they said, these new tax laws are mind-boggling. Would you get a special guest expert? Well, Adam Hodson, CPA, over 18 years in the Las Vegas Valley is one of the top CPA professionals, and he volunteered his time to come speak to us on Thursday Throwdown and bring us up to speed on some of these new tax laws and how they're going to impact us as independent contractors as well as our industry. Adam, thank you so much for volunteering to do this great service to our real estate industry. So in a nutshell, what are just some of the key points of these tax laws that are just boggling people's minds?
So this tax cut is very exciting. It's one of the biggest tax changes that I've seen in over 30 years.
Wow.
For the individual tax preparer, it has the effect of making the tax return much simpler for them to prepare, and it also lowers the rates. But for the business owner, there are some very sweeping changes that the business owners need to know in order to take advantage of all the different changes.
Okay, so it sounds like for real estate agents or loan officers or independent contractors, and we're 1099 from our brokers, and whether we're set up as an LLC or not, we need to be up to speed on these changes. How do you see this impacting some of the areas of these write-offs for us?
So there's three primary tax changes that we're going to talk about in the presentation that have had some very major changes. So one of those is depreciation, both for the way that you depreciate your office equipment and your vehicles, as well as the depreciation on real estate.
And that's so important because so many realtors buy their own rental properties, and this is going to have huge impact on us.
Right, and they've really loosened up the rules regarding depreciation to make it much more favorable to the business owner.
That's a good one then. We like that.
So on the bad side, they've made some sweeping changes to some other deductions like meals and entertainment, which they've drastically pared back. And so that's going to be something that everybody's going to want to look into, because some things that were deductible in 2017 are no longer going to be deductible going forward.
And this is something we want to know now as we go through this year and maybe make some changes in how we entertain our clients and how we recruit new business for ourselves.
You're right. You'll want to know that now. The real star of the tax law change, though, is something called the qualified business income deduction, which is a 20% deduction on the business earnings of any business owner. So it doesn't matter if they're incorporated, if they're a sole proprietor, but it's a brand new deduction that's never been put onto a tax return before, and it provides a huge savings to the business owners.
Well, that sounds like the shining star in this whole tax law change of reading the tea leaves then for us.
It is, but just like any good tax law, there's a bunch of caveats and carve-outs and phase-outs that you have to be aware of. And so we're going to go through all the various points of that you have to meet in order to qualify to get that deduction on your tax return.
Excellent, and probably good for realtors to know and mortgage lenders to know too, because we're getting qualified buyers who are buying homes, and if they own their own businesses, their income, their reported income, may be impacted by all of this as well.
Right, that'll all change, and so they'll need to be aware of that.
Okay, and then heard something about the mortgage deduction and how that is going to impact just our industry as a whole. And is that something you'll be going into more detail on?
Yes, so there's two big changes to the mortgage interest. One is the dollar amount of mortgage interest that you can deduct, and two is the type of mortgage interest that you can deduct. Both of those are changes from last year, so we're going to go into detail about what the new qualifications are for that.
Wow, a lot of new stuff, a lot of valuable information, and again, we welcome you all. It's a courtesy program sponsored by the Mortgage by Design team at Fairway Mortgage that includes a courtesy chef omelet prepared for you individually by a chef. We have our great special guest speaker, Adam Hodson, CPA, and for RSVP and location,
Thursday Throwdown, May 31st at 9 to 10:30 a.m. RSVP to 702 888-236-5217. Sponsored by Mortgage by Design. Located at 5598 South Fort Apache Road.